to go. Good afternoon. As people are coming in, do say hi. We are just coming into 1 o'clock here, so we can safely get started now. So let me press record. Good afternoon. Welcome to this live analysis and trading webinar with myself, Charlie Burton, and Tickmill. So we've been running this webinar for several weeks now. We've been doing this for a good month, not every single week, but we've been doing it for a few months, for a month or more. So what we do is we'll delve straight into the markets here and see what's happening. So I just look at a few of the key markets, some of the major currencies, and then I'll look at the likes of the S&P as well. So what I'm going to do first of all is I am going to come over to the euro dollar, because in previous live sessions we've done like this, I've bought it, and something happened last week, or the last webinar that we did, and that was I'd said previously that we'd got an entry here. You can see on the chart here, there was an entry, and then there was another entry up at 113.30. All of this is, you can go onto Tickmill's YouTube channel and you can go back and have a look at these the prior sessions to see me taking these trades. And we're going to be looking for fresh trades today as well. That one we talked about, that when price comes up to the prior high, then we'd be looking at banking that one. So I banked that last week when the euro came up back up to that prior high. So we'll go and have a look at that in just a moment. This entry that I've got still running, this entry, I've talked about it previously, probably going to be looking for a fair bit more over the month or two ahead. So I'm not looking to come out this one. I am looking towards 120, dare I say it, in the euro. See if it can carry on within this trend. So it does mean to say that you have to have patience, because at the moment the euro had that nice little run last week and it's just having a bit of a pause right now. And these pauses can take a while. But when you're a swing trader, positions trader, well, that doesn't matter, because it still pays out in the longer run. So I'm still going to be holding on to this position. The stop is practically at break even. So let's bring up the panel down the bottom so we can see the position. So the position was originally entered at 112, roughly speaking, 112.04. There you go. I've got a take profit on this position at 119.80, so just below 120. The stop loss is literally at break even at the moment, and there's an open profit sitting there currently based on where we currently are. Now, if I go into the history, we should see down here, there's the profit. Oh no, that's on an S&P. Trying to find them. Just trying to find the close. That might have been it down there. When was that? The 12th of June. Yeah, that was last week. So yeah, there you go. Just at 115, just below 116. There you go. Into that prior high there. Yes. So that was the profit up there on that position. Yeah, and that one's one from back. That one's saying the. Oh, I split it into two. I took two exits, both at roughly the same price, 115.82, and the other one was at 115.83. I just split the exit. So we're done on that one, and I've got this position open. So now, okay, this, as I've already said, I'm going to be leaving. So there's choices. I'm just minimizing that for now. There are choices going forwards as to what to do. I've already added when price pulled back here and then came back into the low 113s, we added. And that one I just banked at, what was it, 115.83 just last week. Okay, well that's fine. What next? This position, like I've already said, well, I'm holding on to this one for a larger move up towards the 120. I've already banked another one. The account is sitting now on 31,200 at the moment. It started on 30,000, this live account here, when we started all this. So it's up about 4% or so in the last month or so that we've been doing this. So what next? Well, as far as the euro's concerned, I would like to add again. So we're going to delve into the euro a little bit here to say, well, where may that be? Bearing in mind, we've only got about 40 minutes to 45 minutes here this afternoon. We haven't got a lot of price movement to deal with at the moment. So here this afternoon, bearing in mind, we've got FOMC, the big one, tomorrow evening, plus all of the geopolitical events that are going on around the world at the moment, which are having an impact. Obviously, the Middle East is having an impact at the moment, and whether the US, do end up getting involved or help to de-escalate, for that matter as well. Plus, of course, we've still got the tariffs situation, and so we've got a lot of moving parts taking place at the moment, which are going to have their effect on the market. So, just double checking we're all good. So, anyone who's here, do say hi. Just put hi in the chat box just so that I can make sure that I am seeing the chat. I'm pretty sure I am. Just say hi in there and I'll see you say hello there. So yeah, I want to be adding in. So where would I add in? That's the question, isn't it? Last time, we had an order and it just bought as price came down. Then I added as price went up. But what about now? I would be okay in putting another order out there on this one. Oh, good, Rajat. Thanks for saying hi. Good. It just means that I know I'm now on the right chat channel because there's all these different chat feeds. Good. Thank you for that. So there's two schools of thought to think about here at the moment. One is if we were to pull back into that prior price zone down here around 115. Okay, I'll look at it exactly in a second. What is that price high there? That price high there was at 114.95. That spike high there. So about where that is not a bad level. So we'll call it 115. As a swing trader, I'm not that fussed about being absolutely accurate and trying to get the absolute pinpoint price. Sometimes it happens. And other times it doesn't. So I'm not too fussed about that. I think about 115's enough as an entry level if we do pull back. So we're going to start calculating that entry because overall the euro is in a trend and I want to continue with that trend. If I come out to the monthly time frame, this again, we've just broken out through the highs of the last 2 years. This has got plenty of scope to retrace to its average, which is my yellow line, which is the 200 moving average on the monthly. So price likes to come back up to its 200 and mean revert to there. Plus it's a load of prior price action going back here as well. So all the way through there. So around the 120 mark looks decent. So if we come back to the daily, and of course the euro could pull back further. It's just done essentially, it's in double top territory at the moment. Could it pull back further? It could do. I'll give it some room. But again, I'm not going to worry too much about whether I get stopped out or anything like that. It's just, again, put an order in there. We'll give it a bit of room on the stop loss and then see if, for one, first of all, if it even gets filled. And we'll look at that as well. And two, the sort of size of the stop. Ultimately, I want to be in this for a run up to 120 now. So if I get in at hi Brian as well. Sorry, just seen. If I get in at 115, so if I get filled at 115, and let's say I have a stop just a bit below 114. So let's give it 120 pips. So my stop isn't at 114 directly, it's a little bit below that. So let's call it for now a stop of 120 pips from 115. So, but if I'm looking to run this up to 120, well, that's 500 pips. So I'm risking 120 to make 500. It's still a good risk reward. So I'm going to put this in as an addition to this swing. So let's start with this. So let's get the ticket up first of all. So I want to risk a percentage. So 0.5%. There we go. And I'm going to put that stop in. I need to put an order in. Oh, it's a limit order. Let's actually put the order in. So what did I say? 115. Now I think price, if it's going to come down, it will come down just the other side of 115 anyway. So I'm quite happy to have it at 115. And it's changed the risk again. So let's get that changed. Ugh. Yeah, 0.5. So 0.5% risk. And a stop loss of 120 pips. Yeah, puts the stop at 113.80. So I can see the risk now. Let's put the take profit in there, so it'll show us then so we'll just put that in at 120. Which will be way off the chart. So it's risking so it's risking $156 to make $650. Looks like a good deal to me. Or risking 0.5% to make just over 2%. So it's just over a 1 to 4 risk reward on there. So it all looks good. I'm just double checking it all here. So I've got an order in there at 115, 0.5% risk. So it's to buy at 115 with a 0.5% risk. 120 pip stop, giving it the stop at 113.80. So I want it just a bit below that 114 if I get filled on this trade, and just putting the take profit in now because we can then see what the risk reward is. Time in force, I want to leave that order in play for not just for a day. I want to leave that in. So I'm going to hit buy. There we go. So that order is now in the market here on this live account with Tickmill. Let's get rid of all those. There we go. And we'll see if it can get filled at some point, maybe tomorrow. We've got a potential for a volatile day tomorrow, but there's so much news going on at the moment, it could get filled. As I've already said, I'm not fussed about getting stopped out. I'm giving it a little bit of room on the stop, 120 pips, just give it room for a bit of wiggle. If it gets stopped, then I can just reassess it. If it gets stopped down there, then it might mean that, we're in a process of a slightly larger retracement or consolidation, and then I can then reassess where I want to try and get in again. Okay, so that's an order there. What about if it doesn't pull back? What about if it pushes up? There's not much I can do today about that because I would need to see what the close is like as far as if it pushes up. But if we did get a strong close tomorrow after FOMC, so forget whatever's going on today, it's a tiny range. I think the market's probably waiting on FOMC, but it's also waiting on the events of the Middle East as well. So let's just go with it that we do get a strong close at some point, maybe tomorrow. And that's only if we do come up. So I've got an order if we come down, but if we do come up, if we get a strong close, then I will endeavor to remember, if on a closing basis, I'll just buy it. So if we get a decent candle, so what sort of bar am I meaning? Anything like that day there, or that day there. If If I see just a nice, 100 pip range day, up bar, that's my excuse. We've got a bit of a consolidation at the moment. Is this a pennant type pattern? I think it is. If I come to the likes of a 4-hour chart, zoom out, yeah, you can see we're winding our way up within this pennant pattern at the moment. There's our flagpole, so to speak, and then there's our developing pennant. So I'd be looking normally for a breakout of that pennant anyway. That's just on a 4-hour chart. So coming back to the daily, just a half decent closing bar would be enough for me to say, okay, I'll just buy that. I'm never fussed about buying the close. Lots of traders don't like it because they feel like they're paying up and then they miss out on loads of moves all the time. So a decent up day on a closing basis, then I'll look to add. Where would I put a stop loss on that? That's the difficulty because I don't know what the day is going to be like. But if it's a strong 100 pip plus up day, I could probably put the stop below that day. Give or take another 20 pips below that low. So if we did get a strong update, oops, didn't mean to do that. So if we did see a strong update tomorrow, I'm not expecting it today, but of course anything can happen, but I'm not expecting it. Not now we're past the retail sales, which came out just a short while ago. So if we did get a strong update, let's say tomorrow, then if this was the low of the day, then I'll just give it a little bit of room, given the fact that I'm quite happy having like a 120 pip stop loss. So just give a little bit on top of it or below it on this occasion, and then just buy it at towards the close. You don't have to wait until the absolute close. By the time you get within an hour of the FX close, the FX isn't going to move much in that final hour of trading, so you're pretty safe. It's very rare that I will be waiting exactly for the close, usually within an hour, and I'll just put the trade on. So I've got a trade plan here with regards to the euro. If it pulls back, I've got an order. If it doesn't pull back and it just fires up, I've got a game plan. So I'm going to be buying close to the close there on that one. And there we go. That's the euro's in a decent position. Of course, markets are always susceptible, vulnerable to pullbacks even when they're within trends. But if we pull back a bit, then yeah, I've got an order down there. Is it aggressive? Yeah, maybe a little bit, but I'm okay with that. And but if we break up, more importantly, I've got a plan for that as well. So that is pretty much it. I would encourage you, if anyone's got any questions as we go along here, do ask whilst we're doing this live session. So I'm pretty much set here as far as the intraday is concerned. So that's a swing order to add to what I'm already in. The risk is already at break even as far as this position's concerned, and I've already banked a profit just late last week when price came into those prior highs. So on the add-in entry. So now I'm looking for a new add-in entry, and that hence why that order at 115 and a game plan that if we do have a decent up day, could happen today, but I'm assuming it's not going to. But if we do get a decent up day and we fire up on a strong, close to 100 pips, let's say, I'm just a decent up bar. I don't know what the range was on that day there. Made a high of 115 and a low of just over 114. So that was about 95 pips. So yeah, a decent up day is enough. Then I'll buy again and pop a stop 20 pips below that particular day. If the range is like already 140 pips, let's say, and we get a really strong up day, then I'll just put an order at the low. Simple as that. So but if it's sort of 90 pips, yeah, okay, I can add 20 pips to that, anyway. But if it's a bigger range day, yeah, I'll just pop the stop below the low. I'm good, Ronix. Thank you for asking. So there's the game plan as far as the euro is concerned. What about from an intraday perspective here today? So I'm going to come over to the S&P now from an intraday perspective. So the slight problem that we've got with the S&P at the moment is it's just chopping around a bit overall. Now, from an intraday perspective, that doesn't really matter now, does it? So let's go and have a look at it on an hourly chart. For me, when I'm looking at this on an hourly chart, it's a bit messy. So other people with different styles will look at it differently, but it's very choppy here at the moment for me. So, and I think that's just generally what's going on in the stock market. The stock market, going back to the daily charts here at the moment, really since last Friday, when Israel first attacked Iran, and then we had the countermeasures and all of that. So the stock market's just been biding its time as to whether it wants to sell off on this war, or whether it's going to shrug it off. I suspect it will sell off if the US gets involved, but if the US doesn't, then the markets may breathe a sigh of relief in that regard. So anyway, really we're looking at this from an intraday perspective. So we got an ebook there, thank you. So Tickmill have just put up there, looks like it's gone onto the Facebook channel, an ebook. So we've got some I've forgotten what's in it. I wrote it, I gave the tips ages ago. I've completely forgotten. Go and check it out, it's in the box here. If we come down to an hourly time frame, one thing that I'll often say, if you look at a chart initially and say, it's choppy, there's not a lot here going on here. One thing that I always say is, well, what does it need to do to get me interested? So change the frame of reference, change the questioning. What does it need to do to get me interested? Just bear with me a second, I'm getting messages coming up. I don't know. Okay. No, we're all right. Sending now. I don't know what that means, but okay. What does it need to do? So, okay, we can very clearly see to the upside, there's a reasonable level there around about 60, 50. So it's a reasonable level there of probing that's been going on. Okay. But as an intraday trader, do we want to wait that long or not? So are there any other intermediate levels before that that we could look at? Well, a bit here, around about 60-30, because we've got this cluster right now of just nothingness. So we need to really break out of this cluster of price action that's going on at the moment. So in order to break out of that, that would put us above 60-30. So unfortunately, it's not doing it at the moment whilst we're live here. And for an intraday, it needs a little bit more intraday management. So it's a difficult one for me to actually bother doing anything with this live here today, because we've only got another 15 minutes or so before we wrap this. But how would I look at doing it? Would be, okay, if we can get to 60-30, I think that we're into a new, what I call operating window there, whereby we're through this, and then price likes to work its way towards prior levels. So then we've got this as our operating window, as I call it. So if we can break through 60-30, then the next overall level is around about 60-50. So I would be wanting to manage my trade towards that level. So at 60, as I said, 60-50, and then we'd see. So the way I would look at it would be, okay, if you can get to that level, great, that becomes, that's my buy point here at 60-30, with a target at 60-50, but maybe to bank 2/3 and then see if I can get a runner and break out on a bit of a run with the final third. that would be of the position. So bank 2/3 of the position there if it goes, and then see if I can just trade manage the final third. I have to be really careful because I do a lot more swing trading, and so I want to hold on to everything. But I appreciate other traders may not. So, but I do think that's a level to look out for there on the S&P 60/30. Anyway, it's the first hint. If I was a swing trader, then I'd be looking back out towards the highs. But if you're an intraday trader, you'd say, well, aggressively 60/30 and see if it can have a run to the highs. By the time it gets up to there, bank some profits just in case it rolls back over again. It's that type of philosophy towards it. So other than that, there's not a lot more to add here at the moment as far as the S&P is concerned. If I come back to maybe the hourly chart, what about the downside? I think overall, again, I think it's a tough ask on the downside. But then if we ask the same question, what does it need to do? What would it need to do? Well, there's an easy level through here, down at 59.90. So in order to get interested in the downside, it's going to need to break 59.90 here. And then you can then manage it down into this zone here, down to 59.50, because that's now your operating window down here. So yeah, if it's going to come down, again, I think at the moment it's too choppy. It's too choppy to make a decision here as to where it may go. So what does it need to do? It needs to break 59.90 on the downside. What does it need to do on the upside? It needs to get through 60.30. And all the rest of the time it's just noise. It's just noise here at the moment. And again, you see that noise when you look at the daily. You see the range. Look how small the range is at the moment. It's not doing much. It's just stuck. So it's got to show some love and move a little bit in order to get us interested. Otherwise, we just get involved in potentially just noise there. At least let's widen the noise window and see if price can get through. Like I've already said, do check out the other tick mill sessions that I've done. They're on the YouTube channel, and then you can see the other trades that I've done. Obviously, I'm still in that euro position at the moment, but we have done other trades as well over this past month or so since we've started this new series. So I do want to come back to the currencies. So we'll come back to the euro first of all, just to recap on that one. Note that one's buy limit down there at 115, and then if we do come up, we're looking for a reasonable size up bar. I suspect it's not going to happen today. Anything can happen, and it could happen if, most likely, some encouraging news was to come out of the Israel and Iran conflict at the moment. So anything could happen. I'm just assuming that we're not going to see a big update today, but of course anything could. As far as the next 24 hours is concerned, then we have the FOMC in the US tomorrow evening, UK time. So I'm going to be looking out towards that and see if that can facilitate a larger up move there. So it's quite simple. If I came out to the other currencies, let's actually go through to the likes of the pound dollar as well. It's a similar sort of philosophy here for the pound as far as the upside's concerned. I do quite like the New Zealand dollar here. Now, so what about the Kiwi? So I've got that plan there for the euro, but what about the New Zealand dollar? It's funny actually, I can see myself in the software from 10 seconds ago. So it's still, I'm moving around from 10 seconds ago there. Okay, so what's interesting here with the New Zealand dollar, there is a pattern right now in play. and it's called a stick sandwich pattern. So I'm just going to go through what a stick sandwich pattern is as far as candlesticks are concerned. Actually, I'll leave that there. There we go. So a stick sandwich pattern is quite simple. If it's a bullish stick sandwich formation, you get an up candle followed by a down candle of similar size. They don't have to be perfect, so I'm deliberately making this a bit smaller. They don't have to be exact. And then again, followed by an up bar, which again doesn't have to be exact, but you've got up bar, down bar of similar size, and then up bar of similar size. That's what we've had over the past 3 sessions there for the New Zealand dollar, from yesterday and then the last 2 days of last week. So when you get a stick sandwich pattern, how do you actually trade it? Well, you would normally wait for the breakout of the stick sandwich itself. So that would be yesterday's high. Now, so could I just put an order in on the New Zealand dollar, like a buy stop above yesterday's high? Yeah, I could do actually. But personally, I want to see if I can get filled on the euro. So I'm going to stick with that euro. There's no point in me being in the euro and the New Zealand dollar, because then I'm sort of doubling up against the dollar. So, but it's quite a nice pattern. I'm just going to stay with the euro and adding to it just because I'm already in it and I want to add to it. But this is a legitimate pattern here, in that the overall movement is to the upside. My moving averages are all curving up, swinging to the upside. I've got a 20-day moving average here, a 50, and that's my 200 here. So they're all moving in the right direction from a moving average perspective. I think the New Zealand dollar, if I come out to the weekly chart, it put in a huge engulfing bar several weeks back off the lows, and also on the monthly it was like what we call a key reversal bar on the monthly, because it made a new low for the move, and lower than this low as well, at least. So it was the lowest low that it had made since, for the last few years, and then closed above the high of the previous month here. So it's got some nice bullish candlestick formations on the bigger time frame. Hi Jamilu. And so I'm still looking overall in the bigger time frame for more follow through. How are we doing for time? Right. So now we've got that stick sandwich pattern. Okay. Although I'm not going to trade it for the reasons I've just given, I've just put orders there on the euro. But if anyone was looking at it, then you would wait for a break of the high. So a buy stop would come in above the high and then put a stop loss down here below the low. And then, of course, you're going to be looking for a multiple of that range to the upside. So for the New Zealand dollar, so that's the excuse for an entry if it does break that high. For what about levels? Well, again, we've got 62 as an absolute minimum, coming back out just on the daily chart here. As an absolute minimum, 62. And if I come out a little bit more to the weekly, 62 is the weekly 200 as well. So it's quite a nice overlap between price level and a key moving average. And then beyond that, we've got the 63 price zone. Lots of attempts at 63 back here. So 62, then 63 are two nice levels. So what does that mean? When I say 62 and 63, well, a partial profit at 62 and then try and run the other half. So maybe bank half at 62 if you were going to be looking to trade this, and it gets to 62, bank half there and run the other half that bit further to 63. And that's a nice, fairly succinct trade there for the New Zealand dollar. So to reiterate, I'm not taking that myself. here on the account because I've actually already put orders in on the euro just a bit here, just 25 minutes ago. So no need to double up there. But it's a nice pattern nevertheless. We'll see if that can break out. Maybe not today, like I've already said with the euro. Lower expectations now for today. We've already had the retail sales out of the US, which were disappointing, but the headline retail sales, but it's just not enough at the moment to get the dollar properly on the back foot because of, to be fair, the control group within the retail sales was slightly better than expected, and that gives us maybe a better representation of the consumer. But I think we've got this overhang at the moment of news in relation to the Middle East and tariffs with the US. So, and of course, also FOMC tomorrow night. We've got Powell going to be speaking tomorrow night. So again, if he changes his tone a little bit in his press conference tomorrow evening, then again, that could soften the dollar. And that'll be enough to send the New Zealand dollar up there against the dollar and the euro as well. So yeah, hello. I see people are coming in and saying hi. Nice to see you. So watch out for that one as well. So there's some trade ideas here today. I'll give you some ideas from an intraday perspective on the S&P. Oh, great news! Finally, my daughter's just passed their driving test. So that's great. It just flashed up on my phone. Phewie. Great stuff. So, there's the pattern on the New Zealand dollar. Nice stick sandwich pattern. A stick sandwich pattern in reverse, I'll just cover it off. If it was a bearish stick sandwich pattern, then you would be looking at a down bar. So a nice big body of the candle, followed by an up bar of similar size, followed by a down bar of similar size. Again, I reiterate, they do not have to be perfect, a bit like these three here. They're not exact, they're similar size bars. The up bar, the down bar, the up bar. Then you're just waiting for a break of that pattern, which would be yesterday's high. And it's the same on the downside. If you had a downside move, then we got a stick sandwich come in, then you'd be looking for a break of the low of that bar for the downside. So there you go. This is something bit else coming in there today. So coming back over to the euro, again, nothing much to add, but I'm just reiterating because people are always coming into these webinars at different times. So I've actually put an order to buy if the euro pulls back. So that order's sitting here, this buy limit order with a stop loss here. I've still got my open position from back here when we did that one a month ago, and that one's sitting in an open profit. We've already banked another profit that they got in at just above 113, and I banked that just below 116. But right now, that order is to buy if we do come down into that zone with a stop down at 113.80. If we don't come down, and let's say tomorrow night we have a half decent up bar, I'll use that and I'll buy on the close or close to the close, possibly tomorrow because it's FOMC day. We'll have to see. So that's what I'm looking at. I'm looking at staying with the trend here. I'm not overly interested in shorting this market. It's not that the market can't come down, of course, but I'm staying generally with the prevailing trend. So if the market pulls back, I want to use a pullback in order to get long, rather than trying to trade the pullback. There's an old saying in the markets: fade the short-term trend in favour of the long-term trend. I'm more of a swing trader, Shantanu. So if you've got a short-term trend, let's say it comes down a little bit, I want to be fading this in the direction of the overall upwards trend. It's just a nice phrase to have in place. There are always going to be times when I will go counter trend if we've come up into major resistance, then of course I will look to go counter trend. But the rest of the time, I'm looking to trade with whatever the trends are. So at the moment for the euro, yeah, I'll fade the short term, i.e. go against the short term. If we do have a pullback, I want to use that pullback in order to get long. And I will continue to do that all the time that we are in this trend. And that is about that. I think we're getting close here. Okay. Before right. Oh yes, of course. News here. We do have another session next week. So I'm just checking my calendar here. So it's the same day next week at the same time. Yep. So we can, and that's being broadcast live via YouTube, Facebook, TikTok. So it's going live through all of Tickmill's social media there. So do log in or check that out for next week, and we'll see where we're at next week. There's always something different going on. So this week, it's I'm just putting orders in. The stock market is a bit quiet at the moment when we were last looking at it, so there's not a lot to say there about the stock market at the moment, even from an intraday perspective, and it's the same on from a swing perspective or from an intraday perspective on some of the currencies. But certainly the scope is there. We've got that stick sandwich pattern there on the New Zealand US dollar, and I've got an order here on the Euro US dollar, and we'll see how they play out. Has anyone got any questions before we wrap up here today? We're now it's now 22 the hour, so we try and keep these fairly succinct for you with just a few ideas. There's every single week that we do these, I've always got something else because I've got so many patterns and things that we can use. A bit like that stick sandwich today on the New Zealand dollar and putting the order in on the euro. Next week it'll be something entirely different, but I just keep on trading this account here for Tickmill, and at the moment it is just the one position that we've got running here at the moment that I'm trading on their account for them, but looking to put more positions in. So we'll see how that develops going forwards, and hopefully I see some of you next week. So it looks like there's no questions. I can't see any coming through. I do appreciate there's a bit of a time lag from when I'm asking if anyone's got any questions to by the time people type, but I don't think there is. So in that case, I shall bid you farewell for now, and I'll see you next Tuesday. So it's the same time as today, next Tuesday, and we'll continue this theme because there's always opportunities in the market. Sometimes in this 40-minute section, there might not be nothing going on from an intraday perspective, but I can still put orders in as well. Other times it's volatile and there's market movement going on, and then we can capitalize. I can look to capitalize on that, or at least identify opportunities as well. So that's where we are today. Looks like no questions. So good stuff. Thank you very much for attending. I'll see you next week.